This is Eric Mwathe with Mwathe.com, September 25th, 2008. The market is at the highs for the day, and as I've been blogging on my Twitter blog, I want to take the opposite side of this trade because I don't think the charts warrant the market to sustain such highs for a long time. They might hold these highs for a little bit, but more than likely the pressure on this market does remain to the downside, irrespective of what you see on your screen. And the only way the market can change the charts if it closes strong for the remainder of the month. If it can hold on to current levels and if it trades lower for the remainder of the month, this market is going to be in trouble heading into October. So you watch out for that. If we give back gains today, you might want to go short this market. Now, those who already have the My Secrets upgrade, I want you to go ahead and refresh yourselves on the ultimate Mwathe breakout, because this is going to constitute most of my video for today. There is an 18-page document here or article on the ultimate Mwathe breakout. Now, these principles are going to come in play in this market because, as I'm going to show you in a little bit, if I can get myself set here. Now, what we are looking at now is the Nasdaq monthly chart. I think 17-year monthly chart. And what we see is that we've broken support levels early in the year on the monthly channel, and we are now testing this secondary level. But what is more important is the action that the RSI is taking on this month. If we close lower, is going to be the lowest trade on the monthly RSI going back to 2003. And then we also see that the MACD is pointing lower and at the lowest level in many years. That cannot be good, guys. In fact, it's very, very extremely bearish. Now, if we look at the Dow 16-year monthly, again, we see the same thing. We've already broken through support, monthly breakout support months ago, and now we are trading lower. Not good. Look at the RSI. We've been trying to hold this level. We seem to be breaking that support, and the MACDs are pointing lower again in levels that have not been seen in years. That cannot be good. NYSE monthly chart. Again, notice we've had this trend, try to hold it, and we cracked. That cannot be good. Now, the one remaining hope has been the Dow Jones Transportation Average. And this monthly chart shows that we've basically found a lot of support over the last couple of months, especially 2008. The transports have not broken support on the monthly, but we are doing so this month. And like I said, if we keep dropping towards the close of this month, then that's going to be the first material breach of this almost 6-year channel. And that, my friend, tells you that there's going to be some accelerated move to the downside in this market, because this is a fresh break, which tells you unless we can recover by the end of the month, then this is going to be another sign that the market is cracking and might accelerate lower. And again, we are seeing this RSI lows might be threatening to to be broken. And also notice that the RSI is at 49. So at the beginning of this month, the RSI was above 50. If we close below 50 this month, it's going to be a big down day, and that remains to be seen. Again, we see that the MACDs are also not looking very pretty. Be very careful out there. And this is a Dow Transport two-year weekly. For the first time this year, we seem to be cracking this channel support lines here. This is just this week. Surprisingly, they've held. And now we seem to be cracking. That cannot be good. The RSI has already cracked, and the MACDs are not pointing in the right direction. And that's why I remain bearish. Unless this market can hold on to the current rally, this is gonna turn around and be nasty. Now, some of the ways that we can play this market now is probably to position ourselves. Either you stay in cash or you have to be short this market. It's not looking good out there. And we can also look at the VIX. The VIX is really interesting. It's down today, and but what is really interesting to me is, for the first time in many years, the VIX wants to trade in the above the 68 level on the monthly RSI. Now, if that happens, I don't know. Yeah, it's gonna get nasty out there. So you watch that VIX, because the more it stays, especially when it moves to the 40s and above, this thing is gonna spike above 68. It's probably gonna be an all-time high, or going back many years. This is gonna be an indication that this market is gonna be dropping very, very, very fast, with big chunks of losses on the averages daily for a while. It's not gonna be good. So I would like the market to go back to a nicely trending market, but I hate to be a bearer of bad news. If this VIX continues moving higher, you can bet anything there is going to be some serious losses in Wall Street. Now, if we look at the VIX recent hourly chart, we see that even though it's down today, it's not really a big deal, because we still remain in this price channel that it's held since September. Alright, so how do we play this? My idea of what we can do now is